This is something that is annoying me just talking about it. It's Idex Stocks has just released a couple of bits of news and I think is really playing with fire. Hi, it's Marco here, and in this video we're gonna deep dive into these two bits of news and we're really gonna understand if this is good news or not. And we don't beat around the bush on this channel. So the first thing, Ideanomics to invest in battery startup Innobat. And this is what you know already, but Ideanomics has actually given them money to do one specific thing because they are not a full-blown company. They are still working on their production. And to be more precise, Innobat will use the funding from Ideanomics to complete its research center and open, their first pilot plant in Slovakia, which is under construction at the moment. But what many people have missed is this. The company, and we're talking about Ideanomics, will work with Innobat to develop and commercialize both standard and tailor-made battery packs for the US market, as well as providing battery for its own business once the full production begins. And that is because not many people have understood that Innobat is a startup and is a bit of a branch of a much bigger group. I'm saying bigger, I mean it's obviously bigger, and is actually producing cars already. Let me show you. So this is Innobat Auto. Yes, so as you can see, they have batteries and they are planning to produce these cars. And at the moment, they already have some, and I'm not just lying, they have already some revenues. Yes, and I'm gonna show you in just 1 second. So they don't have many customers at the moment. It's really a company that is starting over. And as you can see from these other bits of news that I found, is that basically their turnover is very small, $417,000. That was in 2019, so obviously things might have changed, but overall you understand the scope, the size of this company. And so what do you make of this first bit of news? And in 1 second I'm gonna go through the next bit of news, but first of all, remember that on this channel I make video updates like this one every time any bit of news comes out on Idex or on either stocks. I'm also looking at Nvidia, I'm looking at Tesla, looking at stocks that are doing much better. We are looking at whole portfolios here to try to become more profitable. Join my Discord if you want to support the channel. It's just $3 a month. But now, moving on to the next bit, which is the next, basically the VIA deal. Yes, this is something that is annoying me just talking about it. It's good, but also bad. Oh, one little bit of news that I forgot to tell you about this deal with Innobat. There is a secret, not really secret, this is the bit of blubber that Ideanomics has given us for the deal with Innobat, and this is it. So they have invested in Innobat because they want to have access to material and rare earth metals. So basically they want to make sure they don't run out. And in fact, this is what they are saying, help to minimize supply chain risk across our Ideanomics mobility operation companies, which at the moment I don't see it actually as being a risk because we are not selling too much. And let me know what you think in the comments below, but I don't think this, let's say this reason really holds up. But let me know in the comments and we're gonna talk about it. As I promised you, the next thing to look at is the VIA merger. Yes, it's something that I've told you already about on this channel, and if you've been subscribed, you know that already. But so that's something that came out literally yesterday, and they're asking for your vote. If you are a Idex shareholder like myself, well, your vote is very important. So this is basically how they request for, basically a round of voting to make sure that the Idex shareholder base is actually in agreement with this merger via Ideanomics. Now, why do I think this is not fully 100% positive? Well, there is one reason as a shareholder in Idex myself that I don't quite like. I know you might have a different opinion, but it's something to be aware. And this is it. The total aggregate consideration payable for the merger is this $630,000. And where is this money coming from? It's not even on Idex balance sheet. And this is the bit that really concerns me a lot. And this is it. We are talking about Idex selling common stock. We are talking about a pretty substantial dilution that will be added to the float of Idex stock. So that's a lot of dilution for Idex and for Idex investors like myself. Now, what is positive overall, and I don't think this is totally negative, what is positive is that this via merger will actually let Idex become a much bigger company. And becoming a much bigger company is very positive because Idex, the main issue of this company, Idex, is the lack of revenue. And on top of that, the fact that it's not profitable yet. Now, we know from the tech bubble that just increasing revenues on its own doesn't do much. That's what used to be in the 2000 tech crash. Well, there were some companies just going around and buying other companies. And overall, what actually ended up happening, that there was this massive crash, and all these companies that were like an agglomerate of unprofitable businesses, well, they all disappeared. But in terms of Idex, we see some kind of synergy between all these companies, and we can see that this via merger would make Idex a much better company overall, and potentially bring in the revenues that really they need to eventually become profitable. But then this is the question we need to answer then. Is it a good time to buy Idex now after it has gone down so much from the all-time high or not? Well, first of all, let's understand what is happening with Idex and many other small cap stocks. Well, it's very simple. The stock market is a game that, you need to learn what is going on. Hedge funds, what they've been doing, they've been longing, they've been buying shares, buying calls of very big cap stocks. Very safe plays. So we're talking about Apple, we're talking about Google, we're talking about Tesla as well. That's another stock that is very much traded. And at the same time, what they've been doing, they've been just shorting stocks that are not profitable, that have been on a bit of a bubble, like Idex, and many other stocks, unfortunately, that we've been looking at in the past. So, for example, NIO is another one, Baba, so Alibaba, and these are Chinese stocks, and they're going down for the other reason I've told you about. So if there are any particular reason, so it could be that is not profitable, there is a Chinese company that is a company that is really gonna struggle to deliver on their promises, where they've been shorting it. And so let's have a look at how much of a short we have on Idex, and just to understand potentially if they are reducing it or not, if you are still just being crushed under these shorts. And this is the Idex short volume over the last month, but we could even go longer. Let's go longer, let's go 2 months. So you see, this is pretty stable, to be honest. And as you can see on this side here, you see that that's basically the percentage. If the short would, this blue line is the short volume ratio. So if the line would be over here, it means that 100% of the float is shorted. Obviously not the case, but in this case we've been always floating around 50% short. That's an absolute big short, considering that it's been going up and down, obviously not all the time, considering that Idex has had some very good times, let's say, in 2021 when we saw the all-time high in February. Sorry, it's not even the all-time high. We saw a big spike in the past, and that's something I've told you in previous videos. Idex is a stock that is kind of cyclical, if you pass me the term. It's not really a cyclical company, but in terms of stock, what it does, it just pops and then it comes down and just pops again after 1 or 2 or 3 years, And so this is how the company is going. But to just come back to the point, the short volume ratio is very, very high. We are talking about over 50% or around 50%. And this is to compare Idex to the most shortest stocks in the stock market. Now, this is a short list on Market Watch, and this short list does not include all stocks. They include only stocks with a certain size, with a certain market cap. And in this case, as you can see, there is no Idex because they are cutting out stocks with a smaller market cap like Idex. And as you can see, the most shorted are Allbirds. These companies I've never heard of for the moment. I never looked into it. But as you can see over here, so the third most shortest stock is 54%, which is around about where Idex is. So basically, Idex could be one of the most shortest stocks in the stock market, which brings me back to my question. Is it then a good time to buy Idex or not? Well, we do not know when this game of shorting might finish or might, let's say, find a closure. And when we finally see all these shorts be closed, the profit taken, and no more of that happening. What I've told you and I've already mentioned is that Idex is a bit of a cyclical stock. Every 2, 3, 4 years it pops, it just doubles, triples, and even more. And that's the time that you obviously have to have Idex in your portfolio before it pops. And normally this surge of price is because of incredible good news on the company and in the stock market. And the good news is that on this channel I make new videos anytime any news on Idex comes out, and even when it comes out about the whole market, not just Idex. So thank you for watching. I'll see you in my next Idex video.